I'm with Scott Fletcher from Russell. Now, you're one of the directors.
That's right. Yeah, an investment division side of things, yeah.
Okay. Let me start with this. Most trustees say the most important advice that they get, the best advice, is on investment advice. So they just want to, is it that they just want to make money, or they're not aware of what else is out there for them?
I think in terms of the whole scheme of advice, is obviously tax advice, structuring advice, so investment advice forms one particularly important part of it, but I think it's the area that they understand the least. So
hang on, they understand investment advice the least?
The least, yeah, in terms of how to structure an investment portfolio to deal with a longer term plan that they have in mind. In other words, to get them where they're going. They can, I think there's a broader skill set in a lot of SMSF trustees or investors, because some of these people are professionals, so you're more likely to understand tax structures and those sort of things and have that conversation with an accountant. But often the investment world, you know, what's happening in Europe or the Eurozone or wherever it is looks scary, and I don't understand it. That's where they really value some input in that area.
Okay, so it's not just a matter of that it's making money as their key objective, which is probably...
No, it's actually about managing risk, I think, avoiding risk or avoiding downfalls in markets, and how do I approach that?
Okay, the research focused on trustees, their wants and their lack of, or not their wants, but their desires, I suppose. Yeah. What about for the younger brigade? So you're seeing a lot more people in their 20s going into self-managed super funds. Is it a good idea? Is it a bad idea? Is it?
Yeah, it really depends on the situation of that particular investor. So there's minimum cut-offs, which different advisors will have different views on, but it's typically in the 250,000 to $500,000 type range as a starting point.
Right. So 250 would be the lower starting point.
You would generally find that's the lower end. I mean, there's some that go into it at a lower balance than that, but I think you'll find that there'll be most agreement in that 250 to 500,000 type range.
What are the dangers in going in earlier?
In lower balances, in lower balances. Well, it's really justifying the fees and costs and charges. So even though you can get scale, so the more money you've got, the more scale you get, and the more you're able to benefit from discounts and lower charges and so on. So there is that minimum threshold, if you like. So if you're below that minimum threshold, it makes it per dollar a higher cost type of option for you.
Okay. Trustees talk about advice on their terms. Yep. I'm a trustee. I would like advice on, I suppose, on my terms. But what does it actually mean?
Advice on their terms really means I have a set of preferences, I have a set of biases, or I prefer direct investments. I don't want you to put...
And you're saying you as the trustee?
As the trustee, yep. So there's a set of initial preferences or biases that every trustee has. We're all humans and we all have our own. So investment or advice on their terms means I don't want you to just flog me product, flog me different vehicles option and so on. But I want your advice to be where I need it the most. So let me tell you about myself and where my gaps are, and then can you help me with advice in that area? And
do you really think that's the case, or do you think it's a matter of that when you're dealing with trustees, certainly older, maybe 40s plus, that it's more a question of, I've been around Tiger.
Yeah.
I'm not a ninny.
Yeah.
Right, I know what's going on. Is there an element of that? Because that's what I would have thought.
Yeah, well, there's two sides to that argument. So the first side is more for, in our presentation, we're talking about coach seekers versus controllers in terms of type of investor profiles.
So what's a coach seeker again?
A coach seeker is someone who's really seeking advice and assistance to partner with an advisor to try and find the investment solution for him. A controller is more what you're talking about, which is, I've got a large balance. I come into the advisor's office and I say, there's a couple of $1 million, sunshine. Can you just throw me into the best stocks, please?
Yeah.
So there's those two different types of clients. So advice on their terms can mean either talk to me, understand me, these are my gaps, and help me in those areas, or I know everything on X, Y, Z, but I need someone to implement it cheaply for me. Right. There's two different aspects to that. I think strategic advice works probably best in a coach-seeking type of environment.
Okay, and who, on a personal note, who would you rather deal with? I mean, which is more exciting? Let's put it that way.
Yeah, I mean, I'm in the investment profession, so not in the financial planning profession. It's just a little
Yeah.
get out of jail caveat. But I would definitely say I'd prefer to work with a coach seeker, someone that you can partner with who values advice rather than just treats it as a trigger puller or executioner.
Okay, how can financial advisors and planners best help self-managed super fund trustees?
Yeah, I think it is about understanding the client. So every advisor knows the know your client rule.
Yeah.
Okay, so you've got to do your best, do your fact find, figure it all out. But where they can best help trustees is in the areas they're weakest. So if you look at strategic investment advice, which is cited from the report as one of the areas most valued, that's not just stock, which stock here or there, is it BHP or Joe Bloggs Proprietary Limited, or is it the best sector to be in this point in time or not? It's really about understanding your starting point, setting investment goals, and then constructing a portfolio, then measuring it to see how far short or how far in front of your plan you are. And I think once you use that sort of framework, you can best help clients, or advisors can best help clients by seeing where their biggest gaps are and filling them. And often it's an education thing. So it's an education about different asset classes, it's an education about goal setting, and it's an education about keeping them from themselves when things get very emotive.
Okay, so how do you manage their expectations? Because with the world and the cloud and the
absolutely.
it's so
it can be a scary place.
Yeah. So their expectations.
Yeah, I think the expectation has to be set from the discovery point of the process with the client. So when a client walks into an advisor's office, there's typically a discovery type of meeting. Tell us about yourself.
Yeah.
What are your fears, aspirations?
But what about what you're expected to know about them? And what your expectations of what you should know about what's happening in the marketplace and what's happening with the dollar. Not just the dollar. I mean, talking about everything everywhere.
Yeah. Well, that's where it's quite difficult at times for advisors because they have so many things to keep across, so many regulatory changes and so on. And so to expect them to know every single thing that the head of the IMF said, or there's a change in the Fed governor and so on, it's unrealistic to expect most advisors to be across all that on a daily basis. So I think in that sense they need to take a step back and be more strategic about the investment advice rather than getting into what's on the front page of the investment newspaper today sort of thing.
Okay, and we're Russell heading for 2014?
We're a Russell heading for 2014.
Yeah.
Well, hopefully with markets up. That's always nice for a funds manager and for clients as well. But we think, generally speaking, 2013 has been a pretty strong year. Probably more strength in the market than expected. But 2014 is really a year of validation for global markets. So there's a lot of good news priced into things, priced into stock markets. It's really about seeing that economic data come through to justify those sort of valuations now. So a bit of a rocky road in the next 6 months or so as the world starts to get more of on a sustainable growth path. But generally speaking, second half of the year probably looks better than the first half of the year. But if you can stand on volatility short term, things should come through eventually.
All right, good on you. Terrific. Good on you. Thanks very much. Scott Fletcher.
Thanks
from
very much.
Russell.
Cheers.